with Halloween just around the corner, I want to showcase a few different firms whose stocks have strong ties to the spooky fun season. Now, although these aren't our recommendations, consider them to be stocks you should add to your watch list. Remember, I'm not a financial expert or counsel. I'm just a fan of dividend growth stocks, and I urge everyone to kindly conduct your own research before purchasing any of these businesses. The following 5 eerie dividend stocks are offered for your consideration. Hershey's is the leading business, ticker HSY. The Hershey's Corporation produces some of the best candies, including Kit Kats, Twizzlers, Rolos Reese's, and Reese's Pumpkins, which are far superior to regular Reese's Cups. The higher peanut butter to chocolate ratio, in my opinion. It quietly rewards its shareholders with dividend increases, and the stock has performed admirably over the past year. This is one of the more undervalued stocks in the consumer staples industry. Hershey's is up 22%, and over the past 5 years, it's up over 100%. On both time horizons, its performance is far better than that of the S&P 500. This is an outstanding achievement for a packaged food business, and as a result of all the praise, the company's value has increased over time. Currently, Hershey's has a forward price-to-earnings ratio of 26, which is 11% more than the average over the previous 5 years. It seems that late 2018 and early 2019, as well as presently, were the greatest times to buy Hershey's. Currently, it is trading in a more pricey range, which is especially noticeable when compared to the Hershey yields of 1.86%. which is lower than the 19.4 average for the consumer staples sector. This is below the 5-year average of 2.15% by around 13%. This reduced yield is a result of Hershey's stronger performance, and in late 2018, when it was best to buy Hershey's, it was near to a 3% yield. Given that the dividend represents only 49% of earnings and 44% of free cash flow, it is safe to assume that it will remain at that level going forward and has room to expand. Hershey pays $4.14 annually per share in quarterly installments of $1.04 per share in the months of March, June, September, and December. The following ex-dividend date will be in mid-November, providing plenty of time up until and after Halloween to have your shares for that next dividend payment. Hershey's has been paying a dividend for 33 years, and over the past 12 years, the payout has increased. The 5-year dividend growth rate is 7%, but the most recent rise, which was announced back in July 2022, was at 15%, and all signs point to more dividend increases. We saw what appears to be a solid increase in dividends from $6.6 billion in 2012 to $9.72 billion in recent months. The number of shares outstanding is declining, and it seems like they only buy back a little quantity of stock each year. I wish I owned this one, but I don't, so I'm glad it's not going up. Remember, we want to see this one flat, or better still, dropping. I would want to own a piece of this chocolate company someday, but for now, I just admire it from afar and am a content Halloween client. Anyone owning the shares is undoubtedly very happy right now. Number 2 corporation, Kroger, ticker KR. If you reside in the US and need to buy Halloween candy, there's a strong chance you'll be doing so at a Kroger-owned grocery shop. After Amazon and Walmart, Kroger is the 3rd largest retailer. Although grocery retail may not be the most interesting industry, investors like myself value supposedly dull companies like Kroger, which has been paying shareholders for several years. Kroger is another underestimated dividend stock in my opinion. Unlike Hershey's, this company does well during difficult economic periods like inflation and recessions. Another consumer staple business that has been a terrific long-term investment for dividend investors is Kroger. Over the past year, the stock has increased by over 10%, and over the past 5 years, it has increased by over 110%. In both instances, Kroger has outperformed the overall market. In contrast to Hershey's, Kroger is currently trading at a forward PE of 10.8, which represents a 15% discount from its usual trade PE of 12.7. Additionally, it is much below the sector average of 19.5, yields a dividend of 2.41, and is 18% above its 5-year average. Kroger is therefore between being undervalued and being on the lower half of its fair value in terms of both PE and yield. Although the dividend is easily covered by 26% of earnings and 23% of forecast free cash flow, I still like it at these prices. Nothing to worry about, we want to maintain these figures under 60%. In the months of March, June, September, and December, Kroger pays its quarterly dividend of 26 cents per share, for a total yearly payout of $4 per share. Another company that has quietly increased its dividend at a pace above 10% for the entire 15-year period of its dividend history, averaging 12% growth each year during the previous 5 years, is this one. Its most recent rate day was 24. And as I mentioned, this is a firm I like and am now buying. They bought $96 billion in 2013 and sold $144 billion more in the previous 12 months, increasing revenue year over year. One of the businesses that, in my opinion, stands to gain from increased inflation is a food merchant like this one. With its share repurchase program, Kroger continues to add value for U.S. shareholders. As of 2022, it will have around 740 million fewer shares outstanding than it did in 2013, when there were over 1 billion. There are many things to admire about Kroger, but what's more intriguing is the most recent information on a merger with rival Albertsons, which will make Kroger an even greater threat to retailers like Walmart and Amazon. This is, in my opinion, one of the top 3 consumer basic stocks to hold right now, if not the best. The third-ranked business is Mondelez International, ticker MDLZ. Sour Patch Kids, one of Mondelez's most well-known confections, are my go-to Halloween treat. More than 75% of Mondelez's products are sold outside of North America, making it a global firm. Even while Halloween may not be as well observed in Europe as it is in North America, who doesn't enjoy some Cadbury chocolate? Let me know in the comments if you have any other questions about investing. Let's return to the video. Mondelez is outperforming the S&P over the past year, but the S&P has a little advantage over the past 5 years. Over the past year, Mondelez is down a little more than 6%, and over the past years, Mondelez is up almost 38%. One stock on this list, Mondelez, is approaching its 52-week low and is trading at a PE of 19.6, which is close to its 5-year average and the sector average, meaning that by this criterion, we are getting close to a fair valuation. Due to Mondelez's 2.7 yield, which is 24 percentage points higher than its 5-year average of 2.18, the stock appears to be cheap. Now, how secure is that yield of 2.7%? Well, 53% of projected earnings and 58% of projected cash flow are used for the dividend. Although it is a little higher than Kroger or Hershey's, this level of compensation is completely acceptable for a packaged food company with a solid consumer base. For a total yearly payout of $1.54 per share, the dividend is paid out quarterly at 38.5 cents per share in the months of January, April, July, and October. If you take a look at the dividend growth graph, you can see that the company's dip occurred when Kraft Foods spun it off. Since then, there have been 8 years of continuous dividend growth, with the most recent rise being in 2013 at a rate of 10%. Since the spin-off occurred 5 to 6 years ago, revenue has been increasing slowly. They earned approximately $30 billion in revenue during the past year, up from $26 billion in 2017. We are currently 3 for 3 in Halloween firms that do not dilute shareholders, with the shares outstanding continuously falling. In 2012, there were 1.79 billion shares outstanding. As of right now, there are only 1.4 billion. I believe that the Halloween season is an intriguing time to consider adding Mondelez shares to your watch list if it fulfills your investing goals. Mondelez is one of our stocks in the dividend growth income portfolio that you can follow along with Kroger, and is one we are actively buying right now. Company number 4, Target, ticker TGT. Every year, a large variety of Halloween decorations and kid-friendly costumes are available at Target locations. In addition, many people will purchase their Halloween candy here. I must admit that while conducting research for this film, I was pleasantly impressed by Target's online presence. I believe it has significantly improved over the past couple of years. With Target, a dividend investor has a lot to be pleased about. There is no way to sugarcoat the fact that Target has had a horrible year. During this Halloween season, Target's stock is down more than 40%, and it has fallen significantly. When you zoom out, Target has been a tremendous firm that has destroyed the S&P over the last 5 years, nearly tripling the returns. Shares of Target are up 142% in the last year, however, significantly underperforming the broader market. Target's valuation is now selling at 13.2 times ahead, a few points below its 5-year average of 16. This is because of the 40% decline from last year. This stock was costly throughout the COVID fall and state expenses of 2021, but it has just dropped to an intriguing level. It seems like there is an outlier with the free cash flow and simply safe dividends here. But generally, the dividend takes up less than 40% of free cash flow, and it's currently taking up 39% of forward earnings. Shares of Target currently yield almost 3%. Now this is 22% higher than its 5-year average of 2.42. Another sign that Target shares could be potentially undervalued, and the dividend looks safe to me. For a yearly payout of $4.32, the dollar rate's quarterly dividend payment is made in the months of March, June, September, or December. Target's next dividend payment is due on December 10, 2022, and the ex-dividend date is approaching on November 15th. Target has a history of consistent dividend increases and has been the king of dividends for 50 Halloweens. Over the past 5 years, Target has increased its dividend at a pace of 6% yearly. The most recent increase was 20% in June 2022. We would almost definitely never receive that kind of increase in our 9-to-5 employment. Therefore, it makes you happy to see a corporation award their stockholders one. Over the previous 10 years, revenue increased from $73 billion in 2013 to $108 billion in the previous 12 months. With 663 million shares outstanding in 2013, the number of outstanding shares has been progressively dropping over the past 4 years. Now that we have reached 476 million, Target is that wonderful combination of dividend growth and buybacks that has been quite profitable for shareholders. Customers have been purchasing their Halloween decorations, costumes, and supplies at Target, and I don't see this changing anytime soon. Number 5 on the list is Walgreens Boots Alliance, symbol WBA. Walgreens in the United States and Boots in Europe are two significant drugstore chains that together make up the Walgreens Boots Alliance. Why would a pharmacy be included in a list of stocks with Halloween dividends? Anytime during the month of October, you may find as much Halloween candy as you could possibly want, along with the decorations and a wide variety of other items with a Halloween theme. Despite having a fantastic dividend history, Walgreens has lost more than 34% of its value in the past year, and more than 50% over the past 5 years. Investors must evaluate if this company is on life support or has the chance for a turnaround. Given that the price per share of Walgreens is currently 7.2 times profits and the 5-year average is 9.9, the company is currently trading at or near its lowest level during the previous 5 years. With a dividend of 5.78%, Walgreens is a stock with a high yield. If you trust in the future of Walgreens, this appears like a good entry place because it is 63% higher than its 5-year average. This appears like a good entry place because it is 63% higher than its 5-year average, and the dividend accounts for 44% of earnings and 48% of free cash flow. This is regarded as being slightly above normal for a consumer store, which may help to explain why dividend growth is currently slowing. Walgreens distributes a quarterly dividend of 1.92 cents a share, or 48 cents per share, in the months of March, June, September, and December. The fact that Walgreens has been paying a dividend for 90 years is astounding. Over the past 46 years, the dividend has climbed, even if recent gains have only been marginal. Over the past 5 years, the average dividend growth rate has been 5%. But the most recent rise was only 0.5%, and sales have increased over the past 10 months. In 2013, Walgreens Boots made $72.2 billion, and in the past 12 months, they had made $133 billion. There hasn't been much change in recent years, although the number of shares outstanding is lower than it was 10 years ago. After Halloween, when Walgreens puts all that candy out on sale, that is the store to visit. Happy Halloween to all of you who have stayed with us, and until next time, keep investing. Hope you have learned something from this video. What are your thoughts? Comment down below. If you enjoyed this video, make sure to click the like button, and also don't forget to subscribe to the channel and hit the notification bell for you to be updated on our latest videos. See you in the next video. Thanks for watching. Want to learn more and be more financially literate? Click on the next videos we have in our channel, showing on the screen right now.